But it's time for stocks on the editor's radar, and let's get cracking with all the heavyweights today. We'll begin with Reliance Industries, as it of course has been in the spotlight of late, really due to the demerger of the financial arm. And let's talk about what's working in its favor, Nikunj, and what the key triggers down the line are for RIL now at all-time highs.
So, Avan, Reliance Industries has been a special situation stock largely because of the unlocking and the price discovery of Jio Financial Services. Now, that price discovery has happened. That's about 260 rupees, north of 260 rupees. That price discovery has happened. What happens next? Well, back to basics. Because the markets a year ago were not exactly expecting this kind of a price discovery from Reliance. So that has come like a bonus, and that has come like an hurrah. And institutional investors who think 5 years, 10 years, if they want to, who want to buy this new business, they piled up the Reliance stock. What happens now? Well, back to basics, which is that if you really look at the core business from Reliance, in terms of their Reliance stock in this year, frankly, if you take that extra part out, has done nothing. That's largely because you will have to go back to the core business.
Flat year today.
Flat year. It has to go back to the core business. In terms of the core business, the Jio business, you don't know tariff hike when that will change. The old economy business or the OTC business, it will see a sequential decline, and retail business is growing. So there is no zing which will, in a sense, ensure that independently of this trigger of delocking, of the unlocking of the Jio Financial Services, there are triggers which will generate upside momentum. But there's an AGM around the corner. So you could see some adjustment in and around the adjustment. Retail excitement is normally high, but purely fundamentally speaking, I guess Reliance now will be back to basics, as the core businesses do not have any extraordinary trigger, at least left for FY24.
Yep, and it's the one we'll be watching out for as well today closely. But moving on then, let's discuss ITC and HUL, the FMCG majors. And just if we were to compare both of them in light of the fact that HUL came out with its quarterly numbers, do you think that there is some sort of a competitive advantage when it comes to ITC?
So I'm comparing apple and oranges here. You cannot compare HUL and ITC, but the reason why we are talking about HUL and ITC here is that I guess ITC has moved on a completely different plateau in last 1.5 years. The same stock which was getting a stepmotherly treatment largely because of what was happening in terms of because of tobacco business. I guess the FMCG business and the hotel business has come for rescue. The outlook for the hotel business for ITC has not changed. Outlook for the tobacco business has not changed. What has changed is the fact that there could be a possibility of unlocking of the hotel business. That is not the case for HUL. While institutional investors and retail investors have started moving out of HUL into ITC, I guess the trend is real and its trend is here to stay. Both in terms of valuation, HUL is at 55 times, ITC is 28 times. So it's expensive. No triggers. Volume growth is not there. Institutional investors who've been trimming the exposure to HUL, moving into ITC, I guess this will continue. So I will not be surprised that the performance of HUL, and we are looking at almost 6 months of performance, 7 months of performance, ITC of 50%, HUL of 5%. I guess this performance is just going to extend itself, where ITC will outperform HUL, and I think the curve has just about started.
Okay, the curve has just about started. That's ITC versus HUL.